Welcome back to AlgoBot, the channel where we break down automated trading strategies for MetaTrader 5, one expert advisor at a time. I'm your host, and today we're studying a strategy called Order Block RSI Retest. It blends two classic ideas. The first is the smart money order block, which marks the area where a strong, one-sided move began. The second is the relative strength index, or RSI, which the strategy uses as a momentum filter. Over the next few minutes, you'll learn how the strategy spots an order block, how RSI confirms the direction, and exactly how its entries, stops, and targets are calculated. Let's get into it. Remember, this is educational content only. So what does the order block RSI retest expert advisor actually do? At its heart, this is a continuation strategy. It tries to identify the footprint of a large, one-sided move, then waits patiently for price to return to the area where that move began before considering a trade in the same direction. The first building block is the order block itself. An order block is simply the last opposing candle printed right before an expansive, one-sided move. The thinking is that when a strong move leaves an area quickly, some resting orders may be left behind. When price later drifts back into that zone, those orders can come back into play, and the original direction may resume. What makes a move count as significant here is displacement, measured with the average true range, or ATR. Rather than relying on a fixed number of pips, the strategy asks whether the candle's body is large relative to current volatility. Only a genuinely expansive candle qualifies to create a fresh zone, so the definition adapts automatically to any symbol or time frame. The second building block is RSI, the relative strength index. On its own, an order block retest can be deceptive, because sometimes price returns to a zone precisely because momentum has already rolled over. RSI acts as a filter, or a veto. A demand zone return is only considered while RSI still reads bullish, and a supply zone return is only considered while RSI still reads bearish. This screens out the returns that are really the beginning of a reversal. Who is this style suited to? It leans toward traders who like structure-based, momentum continuation ideas and who are comfortable being selective, because the strategy stays flat until a clean setup appears. The notes suggest a trending major pair, such as the British pound against the US dollar or the US dollar against the Japanese yen on the 15-minute or 30-minute charts. As always, this is for education only, and trading carries risk, including the risk of loss. Let's walk through the mechanics step by step. The expert advisor works on closed bars, so it makes one decision per completed candle rather than reacting to every tick. First, it measures displacement. On each newly closed bar, it compares the size of the candle's body to ATR. If a bullish candle's body is at least the DisplacementAtr multiple of ATR, by default, 1.2 times, the strategy looks back over the previous bars, up to the order block search bars setting, and finds the most recent down candle. That down candle becomes a demand zone, defined by its low and its high. A strong bearish candle does the mirror image. The strategy finds the most recent up candle before it and marks that as a supply zone. Each zone has a lifespan. A zone is abandoned once it becomes older than the max zone age bar setting, which defaults to 25 bars, or as soon as price closes straight through it. And importantly, each zone is allowed to produce at most one trade. Now the entries. For a long, the strategy detects an active demand zone and waits for a candle that dips down into the zone but holds its base, meaning the low reaches the zone while the close stays at or above the zone's floor. That candle must close higher than it opened, and RSI must read at or above the RsiTrigger level. When all of that lines up, the EA signals a buy. A short is the exact mirror. The strategy detects an active supply zone, waits for a candle that rallies up into the zone but holds below its top, closes lower than it opened, and shows RSI at or below 100 minus the trigger. Then the EA signals a sell. Risk control is structural and volatility scaled. For a long, the stop is placed a fraction of ATR below the demand zone's floor, set by the stop ATR multiple. For a short, it sits the same distance above the supply zone's ceiling. The logic is simple. If price trades cleanly through the block, the idea is considered invalidated. The take profit is then set as a fixed reward-to-risk multiple of that stop distance, controlled by the reward ratio, which defaults to 1.8. The strategy also holds just one position at a time, and it skips trading when the spread is wider than the max spread points limit. Let's look at the actual MetaQuotes language code that runs inside the Expert Advisor. At the top are the input parameters you can adjust in the strategy tester. RSI period and RsiTrigger control the momentum filter. ATR period and DisplacementAtr define how large an impulse must be to create a zone. Order block search bar sets how far back to look for the originating candle, and max zone age bars controls how long a zone stays valid. Stop ATR multiple and reward ratio shape the stop and target, while max spread points, lots, and magic round things out. Now the long block. The condition checks that a demand zone is active, that the last candle's low dipped into the zone while its close held at or above the zone's base, that the candle closed up, and that RSI is at or above the trigger. When that is all true, the code reads the ask price, places the stop a fraction of ATR below the zone's base, and sets the take profit as the reward ratio times the risk distance. Then it calls trade.buy with those stop and target levels. The short block is the mirror image. It checks that a supply zone is active, that the candle's high pushed into the zone while the close stayed at or below the zone's top, that the candle closed down, and that RSI is at or below 100 minus the trigger. The code reads the bid price, places the stop just above the zone's top, sets a proportional take profit below, and calls trade.sell. After either trade, the zone is marked inactive so it cannot signal again. Let's bring this to life on the chart. On screen, you can see a price series with two highlighted areas, a green demand zone and a red supply zone. And below the candles, an RSI panel with a midline at 50. Above the midline, momentum favors the upside. Below it, momentum favors the downside. Watch the start of the sequence. Early on, a down candle prints, and then a large bullish candle expands sharply away from it. That expansive candle is the displacement the strategy is looking for. Because its body is large relative to ATR, the strategy reaches back to the last down candle before it and marks that candle as a demand zone, the green band drawn across the chart. Notice on the RSI panel that momentum has pushed above the 50 midline as this move develops, so the upside has the upper hand. Now price begins to drift back down toward the green zone. This is the retest the strategy waits for. Over the next couple of candles, price eases lower, and then a candle dips its low into the demand zone but closes back above the zone's base, finishing higher than it opened. At that same moment, RSI is still sitting above 50, confirming that upside momentum has not rolled over. Every condition is satisfied, so the buy entry marker appears. The stop is placed just below the demand zone, where a clean break would tell us the idea is no longer valid. The take profit sits above at a fixed reward to risk multiple of that stop distance, by default, 1.8 times the risk. From there, price pushes higher, candle after candle, until it reaches the take profit target marker. That completes the long example. An order block formed by displacement, a controlled retest into demand, RSI confirming the direction, and an exit at a predefined target. Now watch the market roll over for the short. Near the top, an up candle prints, and then a strong bearish candle expands sharply downward. That is displacement to the downside. The strategy marks the last up candle before it as a supply zone, the red band on the chart. Look at the RSI panel now. Momentum has dropped below the 50 midline, signaling that the balance has shifted to the downside. Price then climbs back up toward the red zone, and the strategy waits for the mirror image setup. A candle pushes its high into the supply zone but closes back below the zone's top, finishing lower than it opened, while RSI reads below 50. That satisfies the short conditions, and the sell entry marker appears. Here the stop sits just above the supply zone, and the take profit is projected below at the same reward to risk multiple. Price then works its way down, candle by candle, until it reaches the lower take profit marker. That completes the short example. Notice the symmetry. In both directions, the strategy needs a volatility-validated order block, a clean retest that respects the zone, and RSI agreeing with the direction before anything happens. If RSI had disagreed, for instance, if momentum had already crossed to the other side of the midline, the strategy would simply have stood aside and waited for a cleaner opportunity. That selectivity is the whole point of pairing structure with a momentum filter. That brings us to the end of our breakdown of the order block RSI Retest Expert Advisor. We covered how the strategy defines an order block using ATR-measured displacement, how it marks demand and supply zones, and how RSI acts as a momentum filter that must agree with the direction before any entry. We also walked through the structural stop beyond the zone and the reward-to-risk-based target, and we watched both a long and a short example play out on the chart. Everything here is for educational purposes only. It is not financial advice, not a recommendation, and not a solicitation to trade. Trading involves real risk, and losses do happen, so always test ideas carefully on your own and consider your own circumstances. If you found this useful, please like the video, leave a comment with the strategy you'd like us to analyze next, and subscribe so you don't miss what's coming. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.